All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, May 31st, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Before we get into it, I'm doing a flash sale here for the courses, for both Carnivore course and for the Cycles course, 25% off. Bundling them for 30%. There's promo codes there, Flash01, Flash02, and promo code bundle for both of them. And that will be from tomorrow, June 1st, until June 15th. So we'll do 2 weeks. Awesome stuff in the course. Ask anybody who's taken them. If you want to know how we got the top and shorted the end of the bull market here to the exact week, as well as calling the June bottom months in advance. Lots of stuff packed in those, so if you want to get in on those, doing a flash sale for the next 2 weeks. But anyways, let's get into the markets here today. So spiders down 68 basis points, Qs down 57. And it was interesting because the Qs were actually underperforming all day long, even off of this kind of rally off of the lows. The spiders had a good float off the lows, and the Qs did not. Last 10 minutes, we got kind of some, I would say it's probably portfolio rebalancing. Look at this dump in Apple, 10 million shares in the last 10 minutes. This was green all day, by the way. And, you know, if we look at the chart of Apple, pretty good tails, like 1-2 tails and heavy volume there. Yeah, don't want to make too much out of it because to me now it looks like rebalancing. Take a look at Tesla there. 8 million shares, 9 million shares in the last 10 minutes there. So big pop. And we had I can notice a few other names. NVIDIA there coming in pretty sharply into the bell. Although, you know, one of the things I noticed about today so much specifically is semis, down 2.53%, 2.5%. We talked about that level yesterday, 150, red bar high, and it's getting a pretty good reaction. A lot of supply up here, right? This is where it sold off from. And again, just a quick plug. We did short this up here off of several proprietary indicators in that Carnivore course and the Cycles course. But again, going right back to where you sold off from initially, and that's where the bags are. So that's where they're going to be sellers generally. And semiconductors coming in. Take a look at AMD. This was down almost 6%, over 5.5%. So big move. We hit that big 618 on Friday. Had a little gap up yesterday, and then a gap and crap. Come on, way overbought here. 82 to 130 in 3.5 weeks. That's just craziness, crazy moves here. But the AI craze is kind of masking a lot of the problems in the rest of the market. We talked about the advanced decline yesterday. If we look at the Qs here, up well over 10% in the last couple of weeks. At one point, again, it was up, I think 6 or 7% from the low on the 24th. But, if we just throw on an advanced decline, just worse and worse and worse here. So again, the AI stuff's masking a lot of these problems, and the market cap weighting helps mask that. NVIDIA down 5.68% here. So possible little evening star there. Big run up, gap up, sell off, and we have good volume coming in too. So NVIDIA looks really top heavy here. Left a massive gap on the chart. Some blow off moves in some of these names potentially. Avgo, Broadcom up 0.5% here today, but this is down 10% from 10 a.m. Yesterday. So pretty big moves here. Just incredible stuff going on. The other thing that really jumps out at me today is if you look at the VIX. So we have the debt ceiling vote. That should be around 8 p.m. tonight. The VIX was up 2% on the day, and it really just came in the last 10 minutes when we got that kind of, Apple dumping out, rebalancing. So that looks like, to me, that's kind of, you could chalk that up. But it's not like the VIX was surging higher today with a market that was down over 0.5%. Why does this matter? Well, we have a debt ceiling vote tonight. Usually when you're going into CPI, FOMC, any one of those big data point or volatility event, an election, right? There's always volatility. Usually you expect vol to be bidding up. And I don't see that right now. So that to me says that there's not a lot of hedges. And right now, this is not a guarantee. There's no guarantee this gets passed. There's lots of Republican opposition. So this does suggest we could be set up for a surprise here, and there could be a rush to hedges if they don't get this done. Remember, it's political theater. These guys, they love their, it's almost like they're getting their 15 minutes of fame, some of these congressmen. They just want to drag this out as much as possible. Don't be surprised if they take this up to wait June 5th. That's allegedly the new X date. you don't be surprised if they come up with some BS, they vote it down. And we could gap down tomorrow. So I think the market's severely discounting that. Either way, again, if it does pass, I mean, I think we probably gap up here, but you're kind of susceptible to sell the news, right? We're going into a lot of resistance. We are into a lot of resistance. Gap fill, this rising wedge, which got saved again. Again, the volume was light this morning. So when you have light volume, you can sell off, but a lot of the time it just floats right back up there. So that can happen. But I would say 425 is going to be pretty good resistance here on the daily and weekly, I would say, for the SPY too. So if we do gap up, I just don't know what's left to rally on here. I mean, yes, we know, AI, I get it, but what about it? Like, okay, so what's it, is that change? We're not going into a recession now because of AI. So I think you're going to get more of a focus towards data. Again, by the way, the JOLTS number came in really hot this morning. And, bonds still managing to scratch a bid, a little oversold there anyway. I mean, they were down for like 10 straight days. So the 2-year did the 2-year note caught a little bit of it. The yield came down. If we look at the actual 2-year yields, 4.4. So still, it's still holding up though. I mean, this is nothing more than a pullback pattern right now. And if this puts in a higher low, which I think it does, and starts heading towards 5%, the Fed's going to have to raise in June. And a lot of people are expecting a pause. Some people are expecting a cut. I don't expect either of those things at this point if that 2-year continues to creep up here. So again, lots of things going on here. We'll watch for, however it plays out. I mean, if they shoot this down, we probably get a gap down. If it goes through, then we probably gap up here. But you can leave a hanging man. You can you're susceptible to reversal. I mean, the Qs are up so much here. You can't continue to take without giving some back. Is what I'm trying to say here. Again, we hit the 618. We've talked about that. Again, so there's your high. There it is, and you're right into that, and it's giving us a little reaction right now. Nothing crazy out of line yet, but you're going into this red bar here. Lots of supply up here. Anybody who bought here, I remember back when this was going on in March and April. Remember, everybody said it was all over here. It's all over. We're going to new highs. The correction's over. These people are. Anybody who bought here is going to be a seller. So again, just like I said with the semis. So something to keep in mind here. We're very extended, overbought, whatever you want to call it here. But just watch that dynamic. Again, outside of that, everything was pretty much the same here. Qs did finish down 2 basis points more than the spiders. So for once, the Qs underperformed. Again, we talked about the semis under a little bit of pressure. The Russell was down the most, as you can expect, down 1% there on the day. Still a weak chart pattern on all time frames. The Dow here down just $1 there on the DIA, and possibly putting in, if this chops sideways, it could be putting in some bear consolidation inside of this red here. So watch for that. Really back above 330, 145 can kind of change that here in the near term, but not in love with that pattern there on the DIA. Semis we already talked about. Back below this level here, probably. I mean, and again, this is the other thing too. Ask yourself, did we build any support on this way up? Look at the intraday. It's just a uncontested 0 DTE gamma squeeze. There's no support, so if you start to break down, I mean, this can go all the way to 135. Right? There's nothing stopping it from here, and then you have a giant gap right here at 129. So just be aware of these things, and I think that we're in a very risky environment, as I've already mentioned here. But cloud software managing to hold up. So IGV up 67% or 67 basis points, 0.75%. Oracle, market leader, that's holding up really well. Adobe was up nicely as well, so that held up the IGV there, but this one still looks top heavy to me. Now transports here. I mean, like every day we talk about this diverging. Well, here we go. 1, 2, 3, 4, 5, 6 hits. We talked about this last week. One hit December. Next hit's in March, 3 months. Next hit's 1 month. Next hit's 2 weeks. Next hit is 1 week. Next hit is 5 days. So we're losing momentum here with lower highs. Oops, sorry about that. We're losing momentum here with lower highs. And you had a pretty good outside candle today, down almost 2% on volume. So the transports here, again, they're telling us the economy's, something's not right here, as we all can kind of figure out. And again, it's really the same story. Tech just kind of negating a lot of this. So if this market ever loses tech, you better hope they rotate, because this is a big pattern. And when this breaks, it's going big in whatever direction it goes in. But to me, you've hammered on this lower trend line a lot. So just be careful here. ZT, we talked about, that was up a little bit today. ZN, let's look at the 10-year. That backed off a little bit. That does have support at 3.6 though, so watch for that going to tomorrow. And then the 30-year here, that has support right around, we'll say 3.285, right? So right in this area. But it did back off here, but if it's at a higher low, it's going higher. XHB, outside move, what we've been talking about, 68, right? So we got all the way down to 68.39. You know, held the daily 50 moving average, but down moved inside bar, and then a continuation. If this continues, and it did it on volume too. So if this goes sideways, 68 is not going to be support. You're going to have to look probably to, 66. But again, that's a little premature right now. But nice little cut there, a nice continuation pattern. ITB, same thing, held to 50 MA. But if you get through that, it's down to 71.50 there. VNQ, man, it's just VNQ of all things today was green. The one sector that is never green was green today, so up 0.5%. Still don't love the pattern here, but at least it's shaping up a little bit better. XLF down like a lot of other things, down 1% on the day, and KRE took a little bit of a hit. It came off the lows. It didn't necessarily break this pattern, so you still, if you lose that 20-day moving average, it's probably cooked back down to like 36.50. But, it came off the lows today by the end of the day, so it's still kind of holding this structure. So I can't rule out an ABC up on KRE. It doesn't look terrible, but still, it looks terrible on the weekly, but the daily is still okay. KBE hanging in there okay, finishing at 34, so it held that 34 handle. XBD, still just choppy consolidation, down 1.33, and slight lower low, holding the 20 moving average. It's, again, still could be choppy consolidation for a move to 460. So nothing broken there, but a little bit on the weaker side, like a lot of other things. Crude here on the day, down 2%. It did come off the lows. To me, this has really got to hold 68, which it's in danger of losing today. It had a nice bounce off of the lows here, and then it just really kind of rolling over there. It had a nice pop, like it was gonna reverse and try to put in a higher low, but we talked about this the last couple of days. If you just ignore this tail here, it's really just kind of like a bare wedge, right? So, and that's a pretty clean break. So I do not like crude here. I wouldn't short it just because there's nothing to really go off of, and I have no control over my mouse right now. There we go. Just because there's nothing really to go off of here, but if it puts in a bear pattern, maybe it can be shorted there, and it's breaking down on volume too. Again, like copper, like I said yesterday, this is telling us that we're headed for a recession here. So it's really pretty simple. Anyways, XLE, as you can imagine, on the weaker side as well, down 1 3/4, lower lows. Again, don't touch this one, leave it alone. It'll be a buy later on. If it loses 75.35, which I think it will eventually, it's going down into this island here where it could have some support. XOP breaking this little trend line here as well. I would leave this one alone. OIH losing that. So we talked about the descending triangle. That's bearish. We broke there. So we'll see where that ends up by the end of the week, but that looks like a breakdown, at least for right now. Nat gas backing off as well, down 2.71. Had a nice pop intraday, then came back off the highs. I do think this monthly setup is pretty intriguing, though. I like this doji, and that does have me kind of interested here in nat gas, but we'll see how that works out in the month of June. All right, let's get over to the dollar index here. So dollar had a good day and did come off the highs, but I like this. So you got the big pop, little inside bar, just consolidate a little bit more, and this will have gas to 105, 106. The more this consolidates, so the more gas it's going to have. I'd like to see that 20 moving average sort of upslope and catch up to price there. Usually that acts as a spring when you can get that to happen. So DXY, I don't see any problems with it right now. Looks pretty good here on the daily, and just into some resistance, so it's just cooking in the oven right now. Over to gold. Gold actually was green on the day, up 0.25%, even with the stronger dollar, although dollar did come off the highs. You held the 100, and we held the 20-week moving average. So I don't have any problems with gold right now. I can't say anything bad. Now, if we resolve the debt ceiling, I think you could get, like I've been saying, I think there's not an artificial bid, but kind of a a tailwind on the bid for gold just because of that debt ceiling. And even despite the strong dollar, you see gold hasn't really come down a lot. And rates, we talked about the 10-year, right? That's had a nice pop, right, the last couple of weeks. But gold's really holding up well, right? So I think a lot of that has to do with the debt ceiling deal and just a little bit of safety play there. But gold holding up okay. If you can't get back above 2,000, you put in a lower high, then we can talk and maybe it can break that level and go down to 1,900. But until then, it's holding up okay, so we'll leave it at that. Silver, nice continuation up 1.66, so 1 2/3. Up move inside hammer, and then a continuation higher. So it'll have resistance at 24 and then 24.50 there in the near term, but not a terrible day there for silver. I still think this has to do a little bit more backing and filling, but again, it's a little oversold there, so it should be getting a bounce. It's no surprise. Platinum, continuation down. This is starting to get kind of interesting here. You get into that 985 area, that 200 moving average. There's a green bar, and that's a weekly, I believe it's actually a monthly green bar. Well, so it's this green bar low here, and then on the daily you had that one right there. So that should be some good support for platinum. I do like this again on the bigger time frames. I just want to see it consolidate more, but pretty good reversal there on the monthly, and that closed out the month there, so we'll be watching that. Palladium as well, closing down near the lows. This is getting interesting to me. I think you get maybe a pierce, a double bottom. This could be a play here, so I'll be watching that going into tomorrow and the next day here, but I don't really see a ton more downside here for palladium. It's a tough market to play because it's thin. I know like the ETF that a lot of people play is PALL. Market's closed right now, but the spread is usually like $1 on this, and it's just hard to get a fill without paying up for it. And if you have to exit out of it, it's also you got to pay out for it on the way out too. So it makes it a little bit tougher here, but I do like the levels there on palladium. Anyways, copper here, that was managed, it did pop back up green, so it did come back in a little bit. Yeah, so got a nice bid in the last hour. It did close the COMEX slightly lower here, but nothing terrible. If this can consolidate, maybe you can have a counter trend pop here, but again, it's definitely been weak, and we've been talking about that for a long time here. I wouldn't do anything with it until at least around 340. All right, so lastly, let's get over to Bitcoin. Bitcoin's still hanging in there, but we had a rejection, right? So we've been talking about this trend line. We went right up into it, and we backed off of that. Now, we haven't closed below this green bar low yet, so that's 26,836, spot 12. If you get a close below that, I probably would flip bear on Bitcoin. Now, I'm not saying to short, but I would say bear bias. Really bearish if you get a weekly close below this 20 MA. But the longer this builds up, this base here, the more power it's going to have to the downside. You know what I mean? It should have been able to break out by now, and it's not doing that yet. So I'm still kind of neutral on it, but if you lose that green bar, that definitely puts me in a more negative camp, and then definitely the 20-week moving average loss puts it into correction mode, if you ask me. All right, lastly, let's get over to the spiders here one more time. Again, so down 0.5%. They did come off the lows. We saved the lows. Light volume, right? Still above the moving averages. Still inside of this wedge. We'll watch that for a break, potentially. But again, bottom line tomorrow, or I should say tonight, if that vote doesn't go through, we're probably going to gap down. And you might see a rush for hedging. So I just think the VIX is cheap here, considering, unless, maybe these guys know something and they know it's going to go through. But still, it's just odd for that to see the VIX down this much and near the lows as much as it is ahead of this debt ceiling vote. Either way, I think it's a sell the news. So on a gap up, if it does get past, which it will eventually, but it's just a matter of, do they drag us through a few more days worth of drama before they do it? So anyways, guys, gonna wrap it up here. You guys take care. Don't forget to take advantage of that promo code. If you have any questions, email me at aaron@carnivoretrades.com. You guys take care. I'll see you all tomorrow.